It's Mark Sebastian, your only option with your midweek update. Today, I'm going to go through what happened with CPI, where we are in the market, and what I see coming up for the rest of the week. So, with that, let's dig in. All right, folks. So CPI is out and it came in hot. And folks, I got to tell you, I can't remember the last time I saw a day like this one. And what do I mean by that? Well, check this out. We opened flat. We dropped down 86 points. We touched 54.06 and we closed 150 points higher to 55.54. That is a crazy, crazy range for the S&P. And part of the reason why, the market has been kind of so on edge. At our peak, we were actually at 55.60. Our high-low range it continues to be astronomically high. SPX, if you look at the chart and where we are, we got within a stone's throw of the 100-day moving average, and we closed at the 21-day moving average. What I want to point out is that we continue to see a pretty big uptick in average true range. That doesn't just measure how much do we move close to close. That's what this purple and blue lines are measuring. That's called historical volatility. Average true range kind of measures how much are we actually moving. And average true range on a trailing 14-day basis is almost 80. That means we're moving on a daily basis about over 1.5% a day. That means the VIX is going to hang out above 15 for some time. Triple Q, another one that had just an absolutely bananas day, was below its 150-day moving average and closed at its 21, just like the S&P. Closed the day up over 2%. Just an absolute bananas day. The ranges across the major equities, pretty nuts. One equity in our Great 8 that looks incredibly strong is AVGO. Look at this move off the bottom. We did buy calls in Delta Strike on the 9th. Kind of wish I'd held them a little longer. Another name that I like to go higher that looks like it's taken off, and we were long. We bought these this morning in Delta Strike is NVIDIA. We are long calls in NVIDIA. They're up already over almost 100%. I'm going to be looking to close those in the morning. Looking at the Russell 2000, it's kind of the weak spot of the day. If you think you missed the boat on the market, you didn't. This is the one to go long. I like this one to pop into the rest of the week if the market is going to continue to be firm. You could see the Russell 2000 IWM make an easy run back to 215, and then we'll see maybe 220. So I'm really liking how the Russell 2000 looks right here. All right, let's pull up the VIX. The VIX settled at 1769. My yield zone number, this is what I use for my backbone SVIX strategy, closed at 4.3. So we are back long in SVIX. The VIX itself closing at the lowest level we have seen since September 3rd. And term structure, we are back in a partial contango. So the VIX itself is now below the whole curve. September is trading below everything. October still has that big kink in it. I'd really like to see October get below November. My favorite trade continues to be my favorite trade, short October, long November, long January. As a trade, I think there's some money to be made. So what are some names I'm going to be looking to go long in the next day or two? I'm looking at potentially getting into Qualcomm and Honeywell, potentially in Trade Zone and in Trading Desk. Now that the VIX has pulled off and we have the Federal Reserve next week, we're going to be looking at strangles in XSP or SPX going out next week. Now you're saying, Mark, what is a strangle? One, if you don't know what a strangle is, you should be a member of Trading Desk. Two, if you do know what a strangle is, then you know that strangles have paid extremely well over the last couple of days. So I am going to be looking at those in Trade Desk going into the FOMC. So for tomorrow on Thursday, we have PPI, and we also have, and these have been moving markets, initial jobless claims. The market is pricing in about a $38 move. That is probably not expensive enough. If you consider that our days range on Wednesday was down over 1.5% to up over 1%, pricing in $38 a movement just doesn't seem like quite enough. That's barely 2/3%. So going into tomorrow, if I had to do something, I'd be looking to go long premium. Folks, in this market where we're seeing vol move around and the market move around, there is a strategy that is market neutral, that is producing really consistent returns, and that is two-way trades. Two-way trades involve trading SPY and the VIX. And two-way trades have had a really nice run the last few weeks. If you've not joined Andrew in his two-way trades, there's a chance to join right now in this email. If you're watching me on YouTube, please like and subscribe. Leave me a question. Leave me a comment. I will answer it. All right, folks. I hope you have a great rest of your trading week. I am Mark Sebastian. I am your only option. Have a great rest of your trading day. I'll see you guys soon.